The world hasn't seen such a drop in crude oil prices for a long time. A slowdown in demand and increased production of shale oil were the two main factors in the price decline. In 2014, economic growth slowed in China, while at the same time stagnant economic activity in the eurozone raised the spectre of recession. Additionally, there was oversupply from the oil-producing nations, everyone wanting to pump more crude seemingly at any cost. A major game changer, the growth of shale oil from US wells. US oil production recently hit 8.6 million barrels a day, and in 2015 is set to reach 9.5 million. The US's dependency on imported oil has also weakened from 60% in 2005 to 30% today. And it is challenging Saudi Arabia to be the world's #1 oil and gas producer. The Saudis believe $60 a barrel is acceptable for the oil market, and in that they're taking an immense political gamble, hoping low prices will shake out the weakest shale producers in the US who won't be able to make a profit. However, sliding prices could lead to a review of some mega projects in the Gulf region. Arab Gulf states have calculated their budgets based on oil prices ranging between $85 and $100 per barrel. An explanation of their strategy from Francis Perrin of Petrol and Gaz Arab. He says Saudi Arabia is making this short-term sacrifice in order to find a balance. It believes that in the medium and long term, things will be very different. Saudi Arabia has very substantial financial reserves, with sovereign wealth funds and foreign exchange reserves in the central bank. It can therefore afford to wait some months, though that's not the case with all producer countries inside or outside OPEC. Indeed, this drop in crude oil prices has had a huge impact on producer countries, especially those who, like Venezuela, Iran and Nigeria, are in a precarious financial state. Costs for businesses will be reduced if prices stay low. Airlines and the road and sea transport sectors have enthusiastically welcomed lower fuel bills. But the most positive aspect will be felt by drivers in consumer countries. In Europe, despite heavy fuel taxes, a price decline boosts people's purchasing power, helping the economy. For US drivers who do not pay taxes on the fuel they use, the purchasing power gain is even greater. However, only a sustained period of low prices can have a major economic effect. And right now, it is unclear how long OPEC's nerve will hold. Our expert says if prices continue to fall in 2015, or if they remain at low levels for several months in 2015, it is quite possible that OPEC will decide in 2015 to respond, because the financial sacrifice that members of this organization can make for a few months or several months cannot necessarily be extended for too long. When oil prices were high in the past, Arab Gulf countries built up major cash reserves to be used when needed. The question now is how long can OPEC stay united in the face of those low prices and reduced revenues?